And similarly, which just goes to show that the true antithesis to a debt-based economy, gold had the highest ever spike in its relative gold-silver ratio. This is such a big point, and I can't underline this anymore. Please listen up. Look into the eyes. I'm telling you something super important. The antithesis to the debt-based economy is gold. It's not Bitcoin. It is absolutely gold. You got the super high here of 128 at the same time, and that's a bullish meter for precious metals. You want it low for bullishness, and you want a super high means the greatest undervaluation of precious metals generally, and silver particularly. So the highest point ever on the relative valuation of the two, and the most bearish indicator for precious metals, was a very quick spike that came down violently once it was done. This is like the NASDAQ blow-off. Think of that. A very quick spike that got absolutely slammed in a very short time, went from 128 and got slammed sub 65. Can give you a value there of that low wick just for the fun of it. But it was, okay, 66. So you went from 128 to 66 in a very short period. That is a proper slap in the face trend change event, in the same way that the debt markets, and we call this on TLT, which is the ETF of long-term, a portfolio of 20 and 30-year plus, and I can bring that chart up as well for you. And it got a huge head and shoulders as well. That broke down and has already made its target, and is a secular reversal for which that target will continue to see further downside and overperformance. So it's not just about making a target. A head and shoulders can do a target, but it continues cyclically down for a lot longer. So the target is actually the first prize. It's not the only prize if you're short. And in the exact same way, the inverse indicator for bullishness on precious metals has a head and shoulder too. And this is what I'm drawing here for you. So that was the head, 128. I don't think you're ever seeing that number again. That's what makes it a seminal head. And I think you're going to have an extreme counter reaction that could see a ridiculously low value. And I've even been on record, people are underpricing that in the point of debt collapse, you could actually get a single-digit gold-silver ratio.
Wow.
Single digit, that means 9.99 and anything less.
So if it's single digit, what is the price of silver?
Well, you know, let's just say 10. Let's say it's 9.99, that it just makes it. You would have a situation where you could have gold at, let's say, this will be a very, very concerning debt position, by the way. And you also have to remember the dollar value may not be, that dollar may not buy you quite what it did today, or even 10 years ago, even less so. But if you're on a 3,000 or a 5,000 gold, you could have silver at a 300 or 500 or greater for it to be a single digit. Don't forget, it's also only mined at about 8:1 as well. So it's it would be, but typically that's below. Markets tend to overshoot one side. When they do it to an extreme level, there's a natural geometry that actually often sees that leverage and all the perversion that caused that to happen have to unwind, leading to a massive undershoot on the other side. By a similar degree. So it's a bit like punching the inflatable policeman. The harder I hit him, the harder he comes back at me. A small tap like that, and he's just rocking like this. A full-on right hook, and he goes horizontal. I got to watch out. He's coming back up. He's going to headbutt me. So this is, in essence, the natural geometry that exists in markets. Our entire methodology is based on it, and it gives us unbelievable targeting and great results. So there's that natural geometry, because you're actually perverting to one extreme for an extended period, and all that degree of perversion has to be unwound if we get a true market. And I want to actually say, for many people, you've got to also bear in mind, you may not get a normal market where you have a broker and you get to trade that through to that point. Because somewhere during that process, you could have a massive counterparty risk failure, and you can have a whole hobgoblins and shut down social unrest, the whole caboodle, and then it gets revalued to that point in retrospect as part of some solution 2 or 3 years after all the drama.
Yep.
That doesn't prove us wrong. It just means systemically the infrastructure was too frail to handle the full geometry of the unwind.
Yep.
But the unwind still happens because the perversion was there. So that's kind of it. It's a bit of a bulkier right shoulder than the left shoulder. We're not too mad about that. But there's definitely been a channel here, and it's been in a sort of, call it sometimes the watermelon smile, but it's been zigging and zagging for an extended period here. And now it's in the upper half. So I want to see it break down hard and get into the lower half, and then I'll start watching more closely. We put alerts while it's on the upside, a higher side. Silver is not about to outperform gold. Gold is your holding still and should be your first. Gold moves first. So the golden rule, gold is God market. Gold moves first. Buy up the gold first. Once you start to see this reverse and breaking this line, if you've gone largely gold and you have a small or a third of your by value in silver, which will actually be by weight a lot more, but a third by value in silver, or even 25%. So you should have been gold more. You would be doing better. Silver's let you down. For all the people who got silver too early, I mean, you've gone up and down. Unless you bought at $11 at the base, most people are too afraid to at the lows. So as we move into the more second phase of the precious metals bull market, so you will rotate a bit more of your gold into silver, and you'll get a bit more of the performance. However, it will spike to a high potentially, assuming we have natural markets still, and you haven't had counterparty broker failure and all the great taking play out on you. And you should be able to, you should be investment purchasing as well. Some of the leverage guys are affected by the brokers. If you're investment purchasing, your parcels should arrive fairly quickly. And you go from there. And you keep stacking. But for us, silver, when it breaks that ascending line, that dashed red line, that's when I will start rotating some of the gold into silver and buying more largely silver. And at that point, I would also expect the firing order to start including some of the miners doing well.